Welcome back to Figure 9 Real Estate. Today, we're going to continue going over what we like and why we invest in real estate, specifically multifamily. The topic is limited liability.
So real estate from a limited liability standpoint makes a lot of sense because there's so much less complexity there than other direct investments. It's just much simpler. So using these straightforward legal structures can really help minimize liability. Things like limited liability companies, limited partnerships, and a bunch of other structures. There's also fewer moving parts. So there's less that can go wrong, less to be missed. And once you set these structures up, they're very easy to duplicate moving forward. So once you have a system that works, you can apply that to all your investments moving forward and have the same limited liability in place.
And in setting up those systems, it's really nothing that you have to come up with on your own. There's plenty of proven best practices and industry standards that you can follow. And if you use them correctly, structuring the deal correctly with the appropriate entities and legal structures, it really sets it up to where there's very limited liability to everybody involved. And along with that, you need to ensure that you have clear roles and responsibilities and that it's clear between members and managers as well as general partner and limited partners in order to keep that limited liability protection in place for all parties. And finally, you can use non-recourse and other similar financing to help reduce the amount of claims that lenders might have on other assets. In doing that, you help isolate that risk to just the project or just the specific asset that you're dealing with.
Right, and protection between each property or investment is really important. There are tax advantages to having those investments structured separately, but also keeping the properties isolated from each other protects from claims that might arise from each one of the other properties. So for instance, in the worst case scenario, it's unlikely that a slip, trip, and fall is going to bring down your entire portfolio. Just have an effect on whatever individual property within which that incident happened versus affecting everything you have at once.
And one of the last big advantages to investing in real estate that really helps limit liability is when you have these structures in place correctly, the limited partners or passive investors are really only putting their capital at risk. There's nothing beyond that, typically. A lot of this, again, comes down to making sure that each property is set up with the appropriate legal structures and ensuring that each owner is operating in the appropriate capacity based on those legal structures. And if you're following all of that correctly, you can limit the exposure that you have and the liability that you might have as an investor to just the cash that you have invested and very little, if anything, beyond that.
So as a quick recap, let's look at the reasons real estate is such a great investment from a limited liability standpoint. First off, it's less complex. There's less that can go wrong. Following proven best practices and industry standards really helps you limit your liability as well. Protection between each property inside of those structures, it also adds another layer of protection. And then, like you say, probably the biggest and most important one is that you only have the capital you invest at risk. So you're not risking your entire portfolio as long as you're staying within the proper LP-GP structure.
So I hope you found that helpful in understanding how we operate and how we invest in real estate. If you're interested in partnering it with us or investing in some of our projects, we'd love to hear from you. If you have any other deals, projects, or opportunities you think would be a good fit for us, please reach out. We'd love to talk to you as well. And until then, you have a great day.
Talk to you soon.